Hey everyone, I'm Charting Man Dan of The Chart Guys. I've been trading cannabis stocks for the last 13 years. In this video, we're going to check in on the sector. We'll talk a little bit about the fundamentals, but mostly focusing on the charts, key levels in the short term to determine if bulls are keeping complete control. We got a recent headline that we have the Safe Banking Act getting a vote in the Senate on September 27th. There's a little bit of wiggle room around that date. It's not set in stone, but that is now the short-term catalyst that we're looking for in the coming couple of weeks. And we want to be approaching things from the mindset of a bull and the mindset of a bear. Whenever I'm trading, I'm imagining myself in both scenarios to know what each side is thinking. We know the bull situation, we know the bull narrative, and most of you have that bull narrative. That's why you're here. Long-term potential, rescheduling DEA, vote catalysts, individual states, yada, yada. So we know that aspect. What is a bear thinking now? A bear right now is thinking, okay, the headline is set, the date is set for September 27th. What headline do I have to worry about this coming week? Yes, the DEA news can drop at any point. The probability it drops this coming week is low. So a bear gets a little bit of relief. I trade this sector in both directions. I have not been swinging short for the risk reward. It's not good risk reward knowing that a headline can drop at any point. But just keeping in mind that there will be bears more comfortable swing trading short this coming week than they have been any of the previous 2 weeks. So that's something to keep in mind, along with the broader market. The FOMC is this Wednesday, and some people like to talk about the lack of correlation in the sector, and big picture, that may be the case, but there is absolutely short-term correlations, and we'll talk about that in just a bit. Let's get to the charts. All right, so quick talk about the broader market, because again, I do believe that the Friday sell-off in the broader market extended the consolidation that we saw in cannabis, because a lot of people, a lot of euphoria, big gap up on Friday, and a fairly weak close, giving back a lot of those gains, and a lot of people potentially a bit frustrated with that. But the NASDAQ on Friday had its weakest day in 3 weeks. That matters because we have the potential of a longer-term lower high forming on the weekly chart, and so there's a potential that the bears could take over the next couple of weeks. And again, the way correlations work is that when there's a huge amount of volume is surging in because of headlines, correlation's out the window. That volume supersedes correlations. It's almost like, just imagine, let's just say, there's $1 million of automated trading, 1 million shares of automated trading. This is made up, but 1 million shares of automated trading on MSOS with, with bots and algos. And when there's little volume, that's a significant percentage of the daily volume, and the correlation may be higher. And then you get a huge amount of volume, and there's a ton of retail volume, and that makes the high frequency trading volume or the algo volume a lot less significant of a percentage of the total volume. And so after you get the headline pop, we've been talking about how we're anticipating volume to start, fading a little bit again. And when that happens, the correlation starts to matter a little bit more. And so just an example, I watch these charts all day, and on the 5-minute time frame, September 13th, whatever day that was, looks like that was on Wednesday. The 5-minute time frame was absolutely very correlated to the broader market. The NASDAQ is here on the left. We started with a little bit of green. We dumped for 30 minutes. The low of the day was hit. I forget if that was like maybe 10:25 a.m. And then we V-shaped for a half an hour. And all of these crypto stocks, or these cannabis stocks, bottomed at the same time and V-shaped bounced with the NASDAQ. Same candles. You can see it's just all green for 20 plus minutes, all green on CGC, all green on MSOS. So there is absolutely short-term correlation, and day traders like myself utilize that, and we use it as a factor in our trading. So just be aware that if we were to start to see fear in the market, if we have a significant bearish reaction to the FOMC, it will impact things. It will impact sentiment a little bit. And I know a lot of you longer-term mindset, well, I don't care, the broader market doesn't mean anything because I'm holding until the election. That's fine, but just be aware on a day-in, day-out basis from one day to the next, it does have an impact. And so being a short-term trader, I'm absolutely watching that because sentiment supersedes everything. It seeps out into all sectors. And so keeping an eye on that and the FOMC reaction this coming week. So gaps, let's talk about gaps. So I reposted a video that I made 2 weeks ago about gaps on Friday, talking about how MSOS has sold off 9 gap up opens in a row going back the entire year. And a bunch of people say, oh, you always talk in hindsight. I literally made this video September 4th talking about gaps on MSOS because at that point in time, we were trading right here. And I knew that gaps were coming in the sector because of the hype and euphoria that was building. And so I tried, I looked at the amount of views on that video, and that same weekend, the cannabis video had 5,000 views, and that gap video talking about how MSOS has sold off every gap up open in the last year and how bulls don't want to see gap up opens, generally speaking, that got 1,500 views. And I look at that and say, there's a ton of people that are in this cannabis sector that are not watching this video. And I don't know what else to do besides post it on YouTube, post it on Twitter multiple times. I mean, okay, that's it. I've done what I can. And most people didn't see it, or at least the majority of people that watched my cannabis video didn't see the video where I'm talking about the gaps in the cannabis sector, because gap ups are for selling as a general rule of thumb. And those of us that traded the 2017-18 Canadian cannabis bull run, the bread and butter play was buy the strong close, sell the gap up open, reload the consolidation. And we did that a dozen times on the way up. And doing that in this sector on this move is working out. And so, the last time, September 6th, I talked about how I sold my entire MSOS position pre-market, and I even shorted the sector on that gap up open, and then I was forced to cover my short fairly quickly the following day. So there weren't many significant gains on that short, but it was because of the gap. And then so we did it yet again this coming day, or I should say this past Friday. And I treated it a little bit differently because what I wanted to see was a gap up, some profit taking, and then a strong close for the hype and euphoria to build over the weekend. And, I laid out my ideal scenario and it didn't happen. This is what the bulls want to see. It didn't happen. We saw a much weaker close than what the bulls wanted to see. So, my position sizing was such that I was going to hold my longer term MSOS swing through this consolidation. But as soon as, I did the morning live stream, and as soon as we run up, the last move here, like, all right, we're in the, the 970s. I don't think I'm going to sell a position here, and I'm going to be away from the computer soon for the day or from the morning. And then as soon as we run up to $10, all right, I've got to take some profit. So I sold some at $9.98 because, again, it's just in my DNA from experience and historical examples. I have to take profit on a euphoria gap up open. And then I reloaded a bit early in the 960s because I was about to leave the computer for a few hours. But again, the mindset is gap ups are for taking profit, and then we gauge how much profit taking do we see. Is it still healthy or not? And so you look at the volume, there was a ton of selling on Friday. There's no other way to slice it. We can zoom in and see the big selling candle on the open and then a big leg down when the low of the day broke. There's a lot of bear volume there. And so what does that mean? That means some shorts are re-entering positions. I know some traders that shorted on Friday. I didn't, not MSOS. But it also tells us people are taking some profit on that gap up open. You have to keep in mind that there are some traders where 10% overnight is they're going to lock that in every time. And I know that many of you are going for the bigger gains for longer term. And again, you just have to keep in mind that there are so many different participants in this market that just have different mindsets, different goals, and different game plans. And so at this point, where do we stand now? What I'm looking at is essentially we have to see, where does the profit taking end? It's, again, just imagine the old school justice scale of supply and demand. And so you have demand exceeding supply, this entire run up. And pre-market Friday, demand exceeding supply. And then as soon as the bell rings, supply exceeds demand because a bunch of people FOMO'd in pre-market. And now the people that are trying to get rid of or trying to sell significant amounts of shares who won't do it pre-market. You can't sell 100,000 shares pre-market without crushing the price. You do it as soon as the bell rings. And the first 5-minute candle on the gap up open had 800,000 shares sold. So someone sold 50,000 plus shares in the first 5 minutes. And so now we have to see so in this moment, from Friday's open, supply of shares is exceeding demand, which is why we're dropping. Same thing happened on the gap up open on September 6th. But we reached a point fairly quickly where we then leveled out. And the leveling out here happened, we hit a low of 788, then we hit a low of 778. And so then demand starts to exceed supply again, when I quickly cover my short and re-add some longs, and the bulls take back over again as that demand then continues to outweigh. And so then we have daily consolidation take place, and supply is exceeding demand, and we pull back. The low of 808 is hit. That is now a key level for me. I can say that as long as 808 holds, we're in a daily uptrend, and the demand is exceeding supply. If that level breaks, then the scales shift from a bigger picture perspective. Right now on this move up, the scales have been shifting on an hourly time frame. The demand has been exceeding supply on the daily time frame. And what we're going to be looking at this coming week is, does that continue or does it shift? And so what the bulls want to see is they want to ensure that on any pullback, we set the daily high or low, the quicker the better, to remain within striking distance of recent highs. And so anything above 808 is a high or low. And what do we need to see? We need to see an hourly trend change back to the bulls, because we confirmed an hourly downtrend on Friday. High of the day, low of consolidation. At that point in time, we did pull back more than the bulls wanted to see, but there were no red flags. And then we set the lower high and lower low, and that's now an hourly downtrend. And so I can say into Monday, anything under 969 is just an hourly lower high. The bulls want to see a push up. They want to hold the low of Friday and confirm an hourly uptrend to regain control. If we break the low of Friday, 887, then that shows us the bears still have short-term control. Go back and look at the last period of daily consolidation. And it was here, and it wasn't a crystal clear hourly downtrend, but it was similar. And so we then held the low. 808 was the low. We held it, and bulls took back over. So the bulls want to find a line in the sand, start defending that support, and then see if demand can start exceeding supply again. So again, overall on the daily chart, no major red flags. Gap up for profit taking is not surprising. It's the playbook for bears in this sector for an entire year plus. Now the question is, can we set the quick daily high or low like last time and remain strong? And we're going to get information every single day that helps us determine those probabilities. And so we're going to know a lot more Monday afternoon, and we're going to know a lot more Tuesday afternoon. And so I am going to be fluctuating what I feel is the most likely scenario based on the information that I get those days. And so again, I have a swing position that I'm going to be holding, but I'll be trading around it. And for right now, the hourly trend is my guide. The bulls want to see a move back up towards 969, set up an hourly inverse head and shoulders to try and keep full control. And keep an eye on the broader market to see if fear starts to poke its head out. As far as individual names are concerned, I'm not going to go into every individual name, but again, just find the level. Find the level where the scales tilted back again. For Curaleaf, we had consolidation, and the level tilted back at 452. That's as far as the bears got before the bulls took back over. The resistance is 580. Anything above 452 is a daily high or low, and that's the most important level for me. Oftentimes, I also just use daily EMA 12. We can make a simple statement and say, if daily EMA 12 is support, the bulls have a strong daily uptrend. And there are times where you'll find a name like CCJ Uranium where we just ride that EMA and just control, control, control. And that's just a simple guide, a visual guide. If it's holding, we're fine. And so we can use that on some of these individual names. Real quick, we've got a new free ebook. I'll put it in the comments of this video. It's going to go over ways to find your ideal setup, when to scale up in a trade, when to scale out, and a lot more. 4 pages of some nice insight for free. Check it out. TCNNF, what's a key support? Right here, 635. That was the pivot. We set a higher low at 563. Now we've got another higher low, and if we pull back, just have to hold 635. Keep those higher lows going. Keep the stair-step uptrend going. When we lose the uptrend on the daily, which is going to happen, we're then going to zoom out to weekly charts. And then we're going to say, all right, what's the retracement size? What's the volume? Can we confirm the first weekly uptrend in MSOS in a long time? And so we'll take it one time frame at a time. Daily uptrend is our guide. When we lose it, we zoom out and we scout a weekly high or low. I know some traders that are waiting for weekly consolidation before they establish long-term positions. And so bulls just have to hope that there's enough of those people on the sidelines with cash looking to get in on the consolidation, that again, the demand, the supply will exceed demand into weekly consolidation eventually, and then the demand needs to exceed supply again as cash on the sideline buys that dip. But we're not going to worry about the weekly chart as long as we have daily uptrends. CRLBF, key daily support, very clear, 218 must hold. If we break that level, we're in a daily downtrend. Who else? GTBIF did we do? Support 1056 to keep the bulls in control. It's getting a little rising wedgie, just showing a little bit of bull exhaustion. Oftentimes, a rising wedge breaking bear indicates a shift. So I'll be keeping an eye on this pattern for GTBIF on the 4-hour time frame. And if that breaks bear, that increases probabilities that weekly consolidation is going to be shaping up. Canadian names. So we anticipated that CGC was going to form a daily high or low and then a daily low or high and form a tightening range. And while that tightening range forms, volume's going to continue to drop off. Why did I anticipate that's the most likely scenario? Because I've been watching stock charts for 13 years. I've watched tens of thousands of charts. And that's what happens when you have a significant move in one direction and then a significant retracement in the other direction in a very volatile name. You get periods of volatility and high volume that transform into tightening ranges and declining volume that then break and spike in volume again. And so what I'm anticipating is that CGC is looking for a lower high compared to 192. And then we're going to look to see, can the bulls maintain 104 to form a tightening range? And then the break of that tightening range is going to give us a bunch of information. And so if the bears break 128 on Monday, our daily lower high is set at 157, and we look back towards 104 support. And anything under 157 is just an hourly lower high next bounce. And so if we bounce on Monday morning, bears are going to be watching for it to be a potential head and shoulders. If we bounce, fail 157, and then roll over and break 128, we confirm the hourly downtrend, the daily lower high is set, and we then look back towards 104. So I know a bear is going to scout an hourly lower high on CGC on Monday. Whether or not that plays out remains to be seen. But if I'm looking bearish, that's a name I'm keeping an eye on. And I know that Fidelity has not had shares available to short for many names in this sector. TLRY, it consistently does have shares to short. So that's the name that I've been shorting for day trades. But if I did have shares available for shorting, if I know I'm going to hold MSOS swing long and not sell during daily consolidation, I'm scouting a CGC short so that I can potentially offset some of that if the sector pulls back together. That's the mindset of a trader. ACB, anything under 115 is a daily lower high. Held on pretty well on Friday. The daily lower high is less shaped up than CGC at this point, which closed much closer to the low of the day. But it is still the same mindset. Do we set the lower high compared to 115 and tighten up? And if that's going to happen, the bears have to break 92. So I am less confident in a daily lower high forming on ACB than I am on CGC just because of percentages. With where we closed on Friday, ACB needs 16% to get to resistance. CGC needs more like 40%. So again, just logic, probabilities. What's the probability that CGC is going to set a daily lower high compared to the recent high compared to ACB? One needs 15, 16%, one needs 40%. We can easily say CGC is less likely to get back up to that resistance. ACB is more likely. TLRY. Bulls are not pleased with how TLRY has been trading. Again, the day of the news, the high was 291, and we've now hit that level multiple times this past week. And it is technically a daily downtrend. High, higher low, lower high, lower low. Daily downtrend confirmed. No follow through, but anything under 337, just a daily lower high. Close at the low of the day Friday. So it's going to be all about 278 support on Monday to see if the bears can follow through with the daily downtrend into further weekly consolidation, or do bulls defend that level? But again, let's just put ourselves in the mindset of a bear. If I'm looking short in this sector, Which names do I have to be more concerned over? Well, CGC and ACB, they're extremely volatile. MSOS and individual names there have been stronger on the daily charts, but TLRY is range bound, and there are resistance zones that are nearby that I can use as stop losses to have less risk. If I'm using CGC, recent daily resistance as a stop level, that's way too far away. That's way too much risk. I'm going to risk 30% before stopping out? No way. TLRY has resistance levels nearby. Now we have a new one, 322. If the bulls do not break 322, they don't prove anything, and we remain on the weaker side of things. So there are bears now that entered Friday that are using 322 as their stop loss. Cron, gap up on Friday, bearish engulfing candle, but anything above 193 is a daily high or low. Bulls want to maintain EMA 12 support. Bulls want to see hourly oversold conditions. If we see those to start this week, bulls want to see hourly oversold conditions mark daily higher lows. That's a strong uptrend. When crypto's in blue sky breakout, we buy hourly oversold conditions for daily higher lows and continuation. So just keep in mind, if we see hourly oversold in this sector at any point this coming week, if we bounce from hourly oversold conditions and then go to a lower low, it's a little bit of a red flag. That hourly oversold bounce needs to mark the longer term higher low, and the bulls then regain control. But it is still a daily uptrend, and we'll scout that higher low. Psychedelic names fading from some news. We had phase 3 results come out for MDMA, and a little bit of a pop on Thursday, but giving it back. And CMPS, we're still missing high volume in this sector, and that's really the signal for me to be looking and focusing on this sector. But CMPS is a potential rising wedge, just like I talked about on GTBIF. Whenever you break resistance straight into consolidation and break resistance, it's a bad line. Break resistance straight into consolidation and break resistance straight into consolidation. It shows you bulls are tiring. There's no follow through. And that's when you look for a rising wedge. And so if this CMPS rising wedge confirms bearish, then the longer term weekly tightening range, we're going to keep tightening up. And it's going to be just another longer term lower high compared to 1092 resistance. And we can tighten up for another month plus. So I'm looking bullish in this sector, but I don't like how every bull break goes straight into consolidation. MNMD, watching for anything under $5 to be a weekly lower high. Just like we're doing, and this is what I love about technical analysis, it applies to all time frames. Just like what we're doing on CGC, scouting the big breakout, the big pullback, the lower high and tightening range. We're now doing that on the MNMD weekly chart. Big breakout, big retracement, scouting a lower high, anything under $5, and then a tightening range. And so there's potential signs of that weekly lower high shaping up. And if we break 403 support, again, we got the daily uptrend, higher low, higher high, higher low, struggling a little. If we lose the higher lows, the weekly lower high is set. So $4 is a key support here, and the bears are going to try and take that out this week. And so we may be shaping up for weekly consolidation, and it's not a coincidence that the potential weekly consolidation in the psychedelic sector is aligning with potential weekly consolidation in the NASDAQ and a bunch of other sectors. ARKK, which represents high risk, high reward growth names, is shaping up a weekly lower high. It's already set. So there are definitely implications from the broader market as well. So keep an eye on your daily uptrends. Again, establish your game plans in advance. A lot of you aren't going to do anything this week, and that's fine. And if you're watching these videos to try and learn some things, that's great. And I appreciate you watching, and that's why I'm making these videos. If you're going to hold no matter what, and you're watching these videos and getting upset when I talk about bear mindset or at why are we red, idiots, that's unhealthy. Close the social media apps. Stop looking at it. If you're not trying to learn, and if you're not short-term trading or acting here, don't look at the charts. Come back for the election. You're just, putting psychological stress on yourself. I know most people here are interested in learning, which isn't great, but some people, it's like, why are you watching every day? You can't look away. I get it. I used to be that way. All right. That's what we got for the sector into the coming week. There is going to continue to be trading opportunity in both directions. And that's that. Establish your game plans in advance. Practice with 2 shares. If you're newer to trading, trade with 2 shares. And, play around with the concepts that I'm talking about. Practice placing stop levels. Practice shorting. If you've got MSOS in a large position, but you see a top fishing play where TLRY is 6 cents from resistance and extended on short-term time frames, try a top fish. And then, if this was a larger position, that would help offset, a pullback in my longer-term swing position. Anyways, I'm done talking. Appreciate you tuning in. Have a great rest of your weekend.